wanted to go through what I think is a really neat tax calculator that's on the web. So probably all you are familiar with TurboTax, at least a name. Maybe you've even used it to complete your taxes in April, close to the deadline if you're like me. Or maybe you've used another, there's several out there. H&R Block has a model, and one of the big 3 or 4 though is TaxAct. Okay, and this is actually a free online calculator. There's others, but I think this is really the best one for simplicity as well as getting a real sense of how these taxes work. Now, if you just watched about, I think it was 6 or 8, must have felt like 20 videos on calculating your taxes, you saw all the math behind this. The nice thing about this is technology takes over. It does the calculations for you, so you don't need to subtract the deductions, you don't need to calculate the tax brackets and what have you. So let me run through this here. When you open up this page, and I'll link this, or if you just Google TaxAct calculator, it's taxact.com/tools/tax-calculator. They have another 1 or 2 on their site, but this is the main one. So it will do for calendar year 2018 or 2019. Okay. I thought they had 2017. They just switched that. Okay. Most people, of course, would have done so this would be for your taxes that you'd file by the middle of April in 2019, this coming spring. Let me show you, there's a lot of things to check here, but it's fairly self-explanatory. We'll just say no there. What year were you born? Okay, and you can do this for yourself, of course. You don't have to sign in or pay anything, but you can really just do it for a hypothetical case. So, and what year you're born doesn't really matter too much unless you're under 25. There's a couple tax savings that you're not eligible for. If you're over 65, you get a couple extra tax saving options. And you can do single or married. If you do married, then that doubles. You have to sometimes enter both your incomes and have a few extra, again, tax saving opportunities. Let's just go with single to keep it simple. And no, and we can leave all these at the defaults. You can go ahead and add. We'll go ahead and have a child, okay? And we'll have one relatively younger child. Okay. There is down here. Oh, actually, on the next page here. Okay, continue. Okay. So the next tab, or could I just click it up here, is income. For most people, it's going to be like this here. So let's say $50,000, and you might have business income if you are self-employed or you own a business. I would leave this one at 0. Taxes withheld. If you enter that, then you'll get like your true refund if you have paid, say, $100 a month or $1,200 a year. But if we leave that at 0, then what we'll see in our results will be the actual tax liability without having assumed we already paid. Okay. So there's other categories here. If you had a savings account with interest, unemployment. Again, most of these for most people are going to be 0, or but for an older person, they would have Social Security benefits, which are taxed different than regular income. If you have investments, you might have income, dividends, or capital gains. Again, if you're older, you may have to be taking money out of your retirement account or have a pension. So just a heads up, part of the next exam will ask you to go into this tax calculator and enter this for a semi-interesting case. So a little more interesting than I am now. Maybe have a family, maybe have some, don't have to, all these don't have to be non-zero numbers, but maybe a few would change. But for now, we're just having $50,000 of income. And all right, then to our deductions. We had a video on this. So if you have student debt you're paying interest on, if you have high medical expenses, if you pay state taxes, big one are these last two. If you have a mortgage, that interest is deductible, potentially. If you make charitable contributions. I'll show this in the end, though, but even for a single person, this has to be, these have to add up to, these deductions have to add up to around $13,000 to make sense. So So if you only have $5,000 in mortgage interest and only $5,000 in charitable giving, which would be 10% for this person on their gross, that they don't get any tax savings from that. Okay. Credits. There's three things that our tax, really our society, Congress, has tried to subsidize, tried to encourage. One is children, one is green energy, and one is education. And there's variations on those. So if you have young children and you pay for daycare, you can get part of that back in terms of tax savings. We'll see you have a child tax credit, which is now $2,000 that the government gives you back in taxes or less taxes. Okay. And so again, we'll just leave this real simple with no special situations. And most people would have maybe one. Some people would have zero. Some would have two or three if they're okay. So let's see here. All right. Okay. This, gosh, they just updated this, so I don't agree with these numbers. These are actually 2017 numbers. Why did they do this to me? Okay, that you would have filed in 2018 earlier this year. So for this person, let me just run through the lines here. They had $50,000 in income. Adjustments are things like if you had moving expenses, which actually this year that's going away too. If you had an extra money you contribute to an IRA. Anyway, for our purposes, they're zero, so don't worry about that. Then for singles, the standard deduction last year was $6,350, and then for each member of the family, they would get a little over $4,000 per person, taxed at zero. So their taxable income is not $50,000; it's about $35,500. The tax then is found by going through the brackets, and again, last year it would have been 10% up to about $18,000, then 15% up to this amount for this person. They would have got a $1,000 child tax credit, so that takes the $4,870 down to $3,870. That's the balance due. So assuming you didn't pay any taxes, had any taxes taken out during the year for federal, this single person with one child would pay just under $4,000. Okay, so less than 8% of their income towards federal. Of course, there's about 5 or 6 or 7 other taxes out there that would also hit this family. So, all right, let me try this real quick. They just changed this drop down. Okay, we'll go 2019. Coming soon. Wow. All right. That is not. Oh, wow. Okay. Okay. Oh, then I lost all my results. So one thing, since it's free, that you don't save your results. Hopefully you got the gist of that, though. I'm going to, I just used this literally a week ago, and it had 2018 was correct, and it also had 2017, so you can kind of see the pre-Trump tax cuts and the new ones. I may check back here in a few days and see if they've got it updated, and then I can show you the new one. But be familiar with this, whatever they have. Again, it's basically answer some basic questions. And again, you don't have to tell me your personal finances by any stretch, so we'll just do hypothetical cases. All right, hopefully that's useful, and give it a try.